Good morning, everybody. It's just after 9:15 on Tuesday morning, 15th of January, 2019. Reminder to use risk capital that you can afford to lose if you're playing this game. Disclosures are on our site. I hope you read them. I hope you take them seriously. The last thing we want to do is hurt people. That's why we don't trade other people's money. We try to allow you to make your own decisions, but we try to give you some guidance with things that we are looking at. And you can notice, so over the time you've been with us, that several different approaches here. Zeke loves the fundamentals as well as technicals. I'm much more technically oriented. There's some that say, no, you can't just use technicals. I like the blend with fundamentals as Zeke shares his ideas with us. But I tend to read the charts. Grew up that way with this business. I'm not smart enough to understand how to, in 10 seconds, interpret some kind of a PPI or any other report and translate that into dollars and cents. So for me, it has made sense over the years to just look at the charts and say, okay, that's support until broken, that's support until broken, that's resistance until broken. And so that's my methodology and my style. This is the last low from yesterday that was a significant low that held. So that's our support, this 77 to 78 idea until it gets broken. Okay, and for now, overnight range, that 92 yesterday had held during RTH and then got busted overnight. Zeke has given us reasons, if you read them in the Slack room, why he believes that coughed up a hairball and came right back, but we're still holding this support zone. And this is now a 2-day range. So we know that the pipe is first and foremost what needs to be negotiated when we wake up and look at this chart. So I had suggested that if you want the trade idea, it's probably a small bounce idea, a convenient trade, because we'd already come back to test the double bottom low. And perhaps the best trade might be to try to skinny along for a few points into that 86 to 87 and a half area, 88. So I'm using this frame of reference, a 2-day reference, to show what I had suggested earlier. And this is the core, this 92 to 87 and a half. And I suggested, first things first, if you woke up and had missed the trades that we would love to have had overnight, realistically, the last resistance zone we're going to look at is this 92 area and probably this high right here. That's an important high right now. And then obviously the one right behind it. So for now, that's our resistance, and common sense really plays a big role in our trading. So I had said at the time, this 92 is resistance for testing the 82 to 80. And the bounce that we got into the 80, excuse me, into the 86 is really the middle of that range. Right? If you take 80 and 92, that's a 12-point range. So 86 has got to be the middle. And if you use that type of analysis over and over, that's how you can get good at intraday swings rather than just everybody who keeps throwing out these big 50 and 100-point targets as if they know the market. You can't trade that way and that way alone. You have to see, if you're going to be a good day trader, you have to see these smaller rotations and understand support and resistance. So for now, that 92 we're going to call our resistance. The boys have to get it up above that. We do have gap back here in the 81 area, we're going to call it, because of the late close and the regular close. We're going to average them out and say, okay, that's 81. And we also know that we had a gap at 93.75 that was closed overnight, but still, a gap that's available to be closed RTH. So my suggestion is the long side is trying to get first to 87.5. This next circle, let me put it right there so we know what I'm talking right there. Get into this box and test this 87.5, 88. That's the first objective. After that, then this 90 middle, and then finally up in here to take out this side. That's the long's objective. Will they do it? Who knows? Nobody knows where the market is going to stall and where it's going to reverse. We make educated guesses and keep trying to read it. Say, okay, I guess it's going the other way. Last night I went to bed and I said, okay, 26.06 1/4, still the resistance target. And obviously, at that point in time, the most important idea would be, can this 88 area hold? And if that held, and if they did not send this thing back overnight after 2 o'clock, then that's still a valid target. So even today, it's still a valid target up there because our math shows us that target getting hit, but it's a resistance target. And once you start to see the risk and reward ideas for another 6 points, those traders gave back 20 points if they wanted to just hang on and hold and wait for that. So that's part of trading, and the hardest part is understanding targets don't go away, but risk and reward dictates what direction the market will often go. Okay, here's our 30-minute Globex, and this chart is showing us we still have some support underneath us in this 73 area, 72. I said, let's use the notion of 75 to 78 as our base support. If that breaks, then we open the door to lower. And currently, I was suggesting that the lines just above us, we're at the pivot point, and the lines just above us will tend to be resistance as we bounce back into them. And the market really has to get above this 88 and then hold, and then obviously take out the 92 to keep on moving. So can we do that? Sure. Will we? Who knows? For now, I'm going to think neutrally, and I'm going to think hit and run and limited opportunity right now. I'm still not thinking about a big plunge, and I'm not thinking about a big run. I'm trying to take them one step at a time. And in this chart, you can see that gap down that was closed overnight. Here's our predictive model. Got into the resistance range back here, 98, poked up into the extreme area, and then we had the pullback. And you can see why, looking at our predictive model, this is our core right in here. So this model is tracking fairly closely that 30-minute chart. And as such, this 78 is our typical flipper, where the market positive going above it and the market seeking support going underneath it. And we have to use the ideas from yesterday as to, like the 92 high yesterday, that's considered resistance until broken. So the longs have to get it up above that and start to press and squeeze the shorts again. And the shorts, by the same token, need to stall before that 92 and try to bring it back and test support in the lower areas. And it's possible we could even do both today. You get news events or whatever. So very neutral is the way I'm looking at this. And if we're looking at a bigger perspective, we can see how we're in the top box, right? In the monthly, right? This 80 is the bottom of the top box. And so these are 20-point boxes basically right now that we are looking at. Right? Is what we've got. There's a little bit tighter frame without looking back at the previous month, just looking at this range. So a little bit tighter look, and we can see clearly how this 80 is going to be a flip zone. You know, and when we said yesterday, you can go above and go below, but eventually you're going to see the importance of that to either break out, you know, the highs or break out the lows. Marginal yesterday, just a couple of ticks. So range type trade is all I know. And if you're looking at yesterday's range, just below a 79.5 is yesterday's middle. So that's supportive right now, trying to hold. Not been able to crack that yet. All right, going to be opening up. Play well. Those of you who are conservative, stay sidelines a couple of minutes. Got the gap just below us here. Going to call it 81. And we've got 97 as a demon, and the 82 right now we've got as our angel. So certainly I'm going to take a neutral bias for now. There's nothing compelling either direction right now.